What's up, everybody? Welcome back to Earn It, Save It, and Invest It. This is week 25 of my $100,000 challenge. I'm taking $7,300 and turning it into $100,000. It's been quite of a bloodbath the last month or so, but really the last week or two. So, if you are at all in the market, you know how bad it's been. So I'm going to go over my portfolio, what's going on in the market, why it's going down, and what you can do to better position yourself to start getting some gains. Because eventually this market will turn around. We're not technically in a correction yet. We're not in a crash yet, but I do feel like we will be headed our way towards there. So again, I'm going to kind of go over what's happening and how you can position yourself. So go ahead and give a like and subscribe. Oh, it's not even happening anymore. There you go. Give a like and subscribe. I really appreciate it. And so yeah, let's just get into the portfolio. Right, so I'm taking $100,000, or I'm taking $7,300 and trying to turn it into $100,000. Now, on Friday I went up 1.3%, but that was nothing because I'm at $7,996. And if you haven't all been following me, that's not good. It's down quite a bit. This is my balance right now, or my positions. Based on the weight right now, TQQQ is the biggest weighted position right now. It just had a stock split, so you used to see this around the 90s to 100, and now it's at 47, 48. HIMS is the second biggest position. It would have been the number one if I didn't sell the 10 shares a while back at $58, and now it's at $34. I could have sold 20, right? I could have sold 20, taken all my capital, taken all my initial investment off, and then just been completely riding with the profits. Do I regret that a little bit? A little bit, yes. But at the same time, I do believe HIMS will turn around and I will be making that money back eventually. And what if I had invested that money in anything else, it all would have gone down anyway, right? Maybe just not as bad, but things have gone down pretty bad. Nike, Celsius, Fugo, Meta, all these ones, right? Now, if you look at the 1 week performance, right? You just look at the 1 week right here, right? Or just like, right here, right? You got one, we got all of these. Everything is down. I have a 24% for Hesai. I have 12, almost 13% for Fubo, 12% for TQQQ, 11% for Celsius. Almost 9% for Amazon, even after Amazon had its big boost. Everything. Meta's big fall happened last week, so that's why it only says minus 3%, but that's after its fall from the week previously. So everything has had just a really bad week. That's just what it is. I've been calling this. I've been saying it's going to happen. I've been saying that it was going to happen earlier. I was maybe like a month and a half too early, but I knew we'd be getting some kind of correction like this. I knew we'd be getting something because it has to happen eventually. It usually does. This is basically what I'm keeping track of, what I'm doing with my goals. And this right now, I'm at week 25. And as you can see, my goal is $9,331, and I'm only at $7,996, which is obviously not what I want. My weekly change is almost negative 6%, so I almost went down 6% in the week. And compared to the goal, I am almost minus 14%. I am trailing the goal about 14%, which is no bueno. Since June 2nd, which is when I started this challenge, I'm up 8.73%, but that is because I deposit $50 a week. If I take out those deposits, I am actually negative 7.5%. And this really goes to show you that it means a lot to make deposits. My account would be completely negative if I didn't make those deposits. And I'm going to be able to buy in position, so when this market does go back up, I will be able to get some gains, and more gains than I would have if I didn't do any deposits. So I'm okay with, I already knew I was going to go down. I said, oh, I'll probably touch the 8,500 mark. I did not really necessarily expect to go under the 8,000 mark, but at the same time, you just never know. I knew HIMS was it's a volatile stock, very volatile, and it was my biggest position when I started the challenge. I was already I had heavy gains on it, really big gains on it already when I started the challenge, so I knew there wasn't as much upside as there was downside in the short term. So that's just that. But this week I did buy a few. I bought Adobe, Meta, and Amazon. So with the $50 deposit that I put in, I also bought $50 worth of Amazon, $50 worth of Meta, and $50 worth of Adobe. So I spent a total of $100, against the account. So I think this is where making these deposits matter, right? I was able to make these buys because I made those deposits. Meta's gone down a lot. Amazon's gone down since it's high, and Adobe's just been in a free fall for a while. So I'm like, hey, I'm gonna pick these things up cheap, right? Might as well. The AAII sentiment. Interesting enough, we have more bulls. It's very interesting, right? We're getting more bulls coming into this. Now, this is not including Thursday and possibly Wednesday as well, because it comes out as Wednesday. Usually you're getting more of like Thursday, Friday, Monday kind of sentiment votes. When you hit the Tuesday, Wednesday, it's not as much. So, but still, I mean, it's kind of interesting that we went up in the bulls and we went down significantly in the bears. So, yeah, that's interesting. How do you view the current level of market concentration in the mega cap technology? It's a major risk that concerns me. It's somewhat concerning but manageable. And it's a natural result of strong business fundamentals, creates good opportunities, and not sure, no opinion. So, clearly people think there's some kind of, a risk, right? A major risk at 37%, yet we're still at 32% bulls. Right? So, how much of a risk do they really think it presents? We'll see. This I love to see, kind of, even though the market's not that bad. So we could stay in the extreme fear for a little bit. Yesterday it was at 6. We usually don't hit that low. We hit 4 earlier this year. I'm tired. I'm always tired, right? It's late night on a Friday. And so, yeah, right now the market's in extreme fear, which kind of goes against the sentiment, right? You can tell that these people who do this survey are different than what the CNN Business Fear and Greed Index. It's really taking the emotion, right? It says right here, what emotion is driving the market right now, right? This is really based on emotions, whereas in the AAII sentiment is more based on their mind. Okay, well, what do you think is how? Are you feeling bullish? Are you feeling bearish? What do you think? Why? You know what I mean? This is just how the market feels, right? So, I mean, everything. Extreme fear, extreme fear, extreme fear, extreme fear, extreme fear, extreme fear. I mean, all these market indicators that they have, the put and call options, market volatility, stock price breadth, all this stuff, stock price strength, market momentum, everything. Extreme fear, extreme fear, extreme fear. And we look at it too. In April, like I said, it was way worse. And look how much we passed the 125-day moving average. We just slammed through it, So, we haven't even touched it yet. So it's very possible that we still go past that a little bit and we continue to go down. Now, I definitely want to show you, this has been the market over the last week, right? It's been mostly red. We have a few winners. Broadcom, Google. Google had some really big earnings, some big announcements, so they've done very well over the last week. But most of the market, most of the market is red. Now, if we look at the VIX, right? Let's look at the VIX. The VIX is now hitting a point where it's kind of like, okay, you kind of want to buy the market, whether it's an index fund or just buy some stocks that have been beaten down in the last week or two. You know, you look at this and it's like, look, October, we had a big shot up, then it came out, and now we're shooting back up. And are we going to have something like this? I mean, look, we had a rise up, and then it came down, and then we shot right back up, and then we came back down. But are we going to spike up? Are we going to pass the 30 in the VIX? You know, but all I know is that when it hits 25, you know, buy a little bit. Hits 30, buy a little more. If it hits 40, buy more, right? And if it starts hitting 50s and 60s, do as much as you can, right? Because I mean, you see these spikes don't happen all the time. When they get all the way up to the 50, and I should put a right at 50. Right, there we go. So, if you hit any of these marks, you gotta buy. And when you see, we're at 25, we've hit this mark plenty. During all of 2021, after the big COVID spike, you know, we had to come back down, and there was plenty of spikes up. There's been so much more volatility since COVID, right? You can see the VIX has lived around that area, especially when 2022 was coming up. But the point is, the VIX is hitting a spot where it might be a good time to buy. The Qs, I've been, like I said, I called out this correction. I said it would go about 10%. And I said it would happen at the end of September. Well, this happened at the end of October, so I was about a month off. But if we do take what I think was going to happen, let me just move that triangle over. We're kind of getting near the bottom of it, right? When you look at this, we're almost there. So, in theory, I'd say we might have another week of downtrending activity with the stocks. You know, maybe another week or so. But really, I don't, you know, let's see exactly how much we're down. Let's do this. Start there. Now we're about negative 7%, right? We're down 7%. And, you know, I said it was going to go to about between 10 to 15%, so it still has a little bit of ways to go. As you can see, you know, the RSI and the MACD is just getting slammed right now, but it doesn't necessarily mean it has to go positive, right? You can see here, oh, it got slammed. Okay, yeah, it's coming back. Nope, and it went back down again. There's no guaranteed in this market. There's no guaranteed indicator. But what you can do, again, is if you were investing here, right here, that was better than investing here, right? That was better than investing even up here. Like, I mean, it was almost the same, but you were on your way down. And if you saw this, and you invested down here, even a little bit more than what you usually do, that was a better decision. So now that we're starting to reach these kinds of levels, maybe now would be a time to start reaching in and maybe buying a little bit. Now, like I said, we're only right here. This is where the level, we're about -4, which is, it can go a lot further than that. As you can see, it can go a lot further than that, so I'm not completely confident. The market still has room to go down, but I think it's going to end up going up at the end, as always. There's a couple things we have to be aware of when it comes to the end of the year, right? It's the end of November. We're going to be into December, and one of the biggest things you're going to see is tax loss harvesting. And what happens is when you are down on a stock, right? When these hedge funds, or anybody is down on a stock for the year, if you sell it, you can actually take that loss and go against your gains, right? Go against your gains. So let's say you lost $1,000 in a stock. but you also gained $1,000 in the stock. If you sell both of those, right? So you have the capital gains of the 1,000, but you also have the loss of 1,000, then that's a clean wash. You don't have, you don't pay any taxes on that 1,000 because you lost 1,000. So that's what's great about it. But you also have to be mindful is that the stocks that are down for the year, come December, sometimes get hit even harder, the last roundabout, and then they start to move up kind of at the very end of December, because by then they're already beaten down, and so people start to kind of be ahead of the game, right? Oh, well, let me start buying now, so that way when it goes back up this year, because a lot of the times that these are beaten down stocks and they're just getting beaten down more for tax loss harvesting, it will reverse back up to next year if it's a good business, right? Or a good economy, all that stuff. So look for certain ones. Adobe, right? You look at Adobe year to date. Let's just look at percentage wise. It is down 24%. I see Adobe going down maybe another 5 or 10% possibly, and then just having an amazing 2026 and beyond. But as of now, it's taken a huge hit, right? So like Celsius, I don't see going down at all specifically for tax loss harvesting or anything. I can see it going up with the market. Wherever the market goes, Celsius is going to kind of go. I think the fall, it fell about 30% recently over the earnings and everything. It's just ridiculous, but I'm okay. I'm still up on the stock, and I know it's going to just rise in the future. That's totally fine. I'm not trying to time the market and trying to sell at the very high right before it falls. There's no point in that. Meta, which is interesting, is actually down for the year. It's down 1.7%. It's actually down for the year. That's pretty surprising. HIMS is still up 38% even with their big fall, right? Let me take out these indicators. Wait. Oh, I'm not even showing you them. Hold on, let me see here. Alright, so we have Adobe, right, down 25% for the year. That's going to probably sell off a little bit more. Celsius is up 40% even after this big fall, right? But still, it's going to be pushed up. Meta down negative. It's 1.74%. Negative 1.74%. That's pretty crazy. HIMS is actually still up 40% even after going down 45% recently. It's still up 38%. So I don't see HIMS being sold specifically for tax loss harvesting. Nike down 15%. I could see Nike go down another, few percentage points based on people saying, hey, we've held on to it. We're not doing anything with it. We just need it. We'll take the loss. We'll put the cash somewhere else, and we'll use that loss against some of our gains. People are going to do that. Fubo is now down 20%. Some people might be using Fubo, right? People might be using Fubo to do that. So Fubo could actually continue to go down as well. Some of these like Amazon and Meta, those are not going to be tax loss harvested at all unless it was like a huge down year, just because Meta's down negative. The 1%, right? That's not going to do anything for someone's big account, all that. The hedge funds, like 1%, it's not a big deal. They're looking at people like I said, Adobe, who's down 24%, something like that. Let's see how I know they went up a lot. Yeah, see, even after their big, huge fall recently, they're still up. So, but Fubo, right, down 20%. People might be like, you know what? Let me take my loss against my gains, and that's that. So. Yeah, that's kind of the main thing right now. What's going on with the market? It's a late night for me, so I'm not going to go too much into it. But I would say buy. Start making some buys. Looking at some companies that you see that have gone down, and be like, hey, now's a good time. It's on a discount, right? Meta's on a discount. Things are on a discount. Google is not. If you look at something like a Google, it is not on sale at all. Google has just been on a rocket ship, right? So, even with what's happening, right? I mean, look, we look at something like an NVIDIA, right? NVIDIA's gone down a little bit, right? Palantir for the year is still up 100%, but it's gone down just recently from its highs 24%. So, you know, Palantir's still high up there. So, you know, the market's moving. Oh, here, I'm not even looking at it. Palantir here. This is Palantir. Then I did what? NVIDIA. See, NVIDIA went down, but Google's up, right? Google's up 56%, and it's just continuing to rocket ship up, right? So if we start seeing Google make a reversal a little bit, if we start seeing other companies, something like that, what's another one? There's another company that has been pretty resilient. It's been going, no, it's not NVIDIA. NVIDIA was, and then it, no. No, I know Google's been doing very well. Meta took a really big hit recently. I mean, really big hit. Like I said, it's negative out of all the, Mag 7 except for Tesla. Oh, let's see Tesla. Tesla's up 2%. That's crazy. So yeah, just don't be scared. Just be aware and prepared. And yeah. So thank you guys for watching. Go ahead and please give a like and subscribe. I really appreciate it. I hope everyone's portfolios are going to start turning around soon. But yeah, just buy a little bit now, buy a little bit next week, buy a little bit, and eventually you'll have a lot. So yeah, thank you for watching, and never forget to
earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.